I just gave these animals just a couple buckets of feed this morning. I don't know if y'all can see it, but it's just barely drizzling. The rain just kind of let up. It's been drizzling all morning, and so I don't want to leave feed in the bins and then have the feed go bad, and then I have to scrape it out with my hands at the end of the night. I'll have to scrape it out with my hands, and I don't really want to do that. So I'm just gonna feed them what they're gonna eat, and I'm not gonna leave anything in the bins for them. And okay, so in the past I've talked about this, and I'm gonna bring it up again today. But a long time ago I've spoken about this whole idea of you don't want to end up in a situation where all you have is a massive pile of BS and then you have no money. All right, and in reality, most of you are actually a vast majority of almost everybody is actually going 180 degrees in the wrong direction. Like, you actually need to turn around and go the other way completely. And this is and I was actually and I'm going to talk about this, and I'm going to talk about it today. I'm going to give you a very we're going to do a little bit of a thought experiment. We're going to see are you poor or are you not? Are you ingrained into being a poor person? And here's the thing: it's like, once you become aware that you are a poor person, the hard thing is that and I've actually spoken about this. It's like when you're like me, and I've already said I don't save people. I am going to do what I can to help the most people, but I don't save people. All right, I'm gonna do what I can to save the most people, but in reality, or I'm gonna do what I can to help the most people, but I'm not gonna save anybody. I don't save people. And in reality, we're looking at maybe like 1 out of maybe 10,000 of you that are actually going to succeed out of this thing. Like, if there are 10,000 of you right now that are legitimately poor people, maybe 1 of you are actually going to turn around. And you're going to go, oh man, like, I need to go and do something better for myself. There's no reason for me to be poor. If anything, I'm going 180 degrees in the wrong direction. And here's a very good example. Let's talk about Coca-Cola stock. Instead of my business, let's talk about Coca-Cola stock, because I've already said that all businesses, it doesn't matter what business you're looking at. It could be Coca-Cola, it could be My Ranch, it could be Google, it could be Facebook, it could be whatever. It could be any company, it could be Tesla, it could be any company. All companies are evaluated the exact same way. All companies are, all businesses are, everything is, all businesses are evaluated the exact same way. All of them. Their worth, the evaluation of the company is determined by a multiple of their earnings. All of them are. And any company that is doing relatively good, they're doing good. They're not just they're clearly going to grow in the future, and they're doing good. Will have a 15 to 25 times earnings multiple. Anything higher than 25 is effectively a company. The higher that you go beyond 25, you're essentially running into a situation where people have people are anticipating a large amount of growth in the company, right? I think that this company is actually going to grow 325% in the next year. Then this business is not worth $1.25 million. This business is actually worth $5 million. I anticipate that this business is worth $10 million, because if I were to give this business a 15 times multiple, that 15 times multiple would just mean that the business is going to just do good in the future. But I actually anticipate that this business is not only going to do just good in the future for the long run, but it's actually going to grow exponentially. Then now we're talking about a higher multiple. All businesses are evaluated the exact same way. All of them are. And so in this situation, let's talk about this. This is going to be a little bit of a thought experiment. And a majority of you, if there are 400, 500 of you watching this, 490, 480 of you are going to be poor people. And here's a very good way to think about it. And you're actually going 180 degrees in the wrong direction. All right, you have a massive pile of BS and you have no money. Here's a very good way to think about it. Let's say Coca-Cola stock. I talk about the stock market all the time. In reality, I'm just a commodity trader, right? In reality, I trade stocks, but my stocks are commodities, right? I effectively trade fertilizer, corn, and cattle, right? Which are global commodities. They're all traded on the stock market. So me, I'm just a commodity investor. More or less, I'm just a commodity investor, a business owner, and a real estate investor. If you actually take a look at what I'm doing in terms of a business perspective, I don't invest in tech companies. I don't invest in service and hospitality. Me, I'm more or less I'm a business owner. I'm a commodity investor, and I am I am that's what I do. I'm a real estate investor. That's essentially what I do in terms of business. So, I talk about the stock market, right? I talk about the stock market, the interactions of different stocks, etc., etc. And, I said that when you're looking to make money, what you're looking to do is find something that is equitable, very equitable. We're not talking about, I'm not talking about Pokemon cards. All right, the extra $100 or whatever dollars a month that you can make on Pokemon cards is not going to change your life. Even if you made $1,000 a month trading Pokemon cards, it's not going to save your life. All right, I'm talking about making like $400,000, $500,000. You can go to the bank right now and take a $100,000 loan, and you can light it on fire. And even if you did that, you would actually make more money than that $100,000 loan cost you. That's the kind of money that I'm talking about. You want something that is very equitable, a very large company, multi-$100 billion company, Coca-Cola, very equitable. And if you're looking at Coca-Cola stock right now and you're like, oh my God, I think that Coca-Cola is going to go down by 50%. Oh my God, I think, oh my God, I can't do it because, the $1,000, the $2,000 a month, it's just too much. I can't handle it. Here's the situation. You're poor. You're ingrained into being poor because you're worried about $2,000 a month when I'm talking about making 400 grand. And when you have a 400 grand net equity position and it's going up by about 10% a year, going up by about 7% a year and producing you a 3% dividend, you can take a loan against that $400,000 position for whatever you think is safe. If you legitimately think that Coca-Cola is going to go down by 50%, then take a loan for $200,000. You still have half of your stock and you're not going to get margin called. It doesn't matter. All right. And so here's the situation. Let's say that you legitimately think, and this is what I mean by you're actually going 180 degrees in the wrong direction. You have a massive pile of BS. You have no money, and you're probably going to be poor forever. Here's what I mean. Coca-Cola, let's say that you think for whatever reason you have convinced yourself that Coca-Cola stock is going to drop by 50%. Coca-Cola is going to drop by 50%. What we're talking about, Coca-Cola as a business. I've already talked about Coca-Cola as a business, right? When we talk about Coca-Cola, we're talking about a company that has a little plastic bottle and a little aluminum can. They put a little bit of water in it, a little bit of syrup in it, and then they sell it for like $1. That's the market that we're talking about. So you're worried that Coca-Cola is going to go from selling for $1 a can to 50 cents a can in the next 10 years. That's what you're worried about. And this is what I've been saying. If anything, you're going 180 degrees in the wrong direction. If anything, Coca-Cola is going to be selling for $1.50 a can in 10 years, and people will still buy it. I've already talked about the broader idea of inflation, right? If the central bank gets what they want, they're going to get effectively the bigger economic forces at hand are looking to push the economy up by 2% inflation every single year. That's the bigger economy at hand. The bigger economy at hand is they are, the bigger economy is looking, the broader economy is looking to inflate by 2% a year. So in 10 years, we're talking about maybe 25% inflation. If anything, Coca-Cola is going to go from selling for $1 a can to $1.25 a can. If anything, that's what's actually going to happen. Like, you're actually going 180 degrees in the wrong direction. And when Coca-Cola goes from selling for $1 a can to $1.25 a can, the earnings of the company will go up. I don't remember the last time I checked the Coca-Cola P&E ratio, but I believe that the Coca-Cola P&E ratio right now is at about 20. And 20 is right in the middle for a good buy. If you're looking for a company that's a good company and that has a good earnings potential, you take a look at it for the long run and you're like, well, this company, and here's the thing. Okay, and I'm just gonna, I'll talk about Coca-Cola instead of talking about my business today, because all businesses are the same. It doesn't matter if I'm talking about my business. It doesn't matter if we're talking about Coca-Cola. It doesn't matter. The business produces this product, and this is, the business is being ran by, this person, and, has a, whatever, right? I mean, people are not gonna stop eating beef tomorrow. People are not gonna stop drinking Coca-Cola tomorrow. So let's take a look at it. Coca-Cola stock, right? Whatever. If anything, Coca-Cola is going to be selling for $1.25 a can in 10 years instead of 75 cents. It's selling for about $1 a can right now, and in the future, it's going to sell for $1.25. It's not going to sell for 75 cents. If you think it's going to sell for 75 cents, you're actually more or less going 180 degrees in the wrong direction. You're completely incorrect. All right, if we are gonna actually take a look at it, I mean, the broader economy at hand, everything, the 2% inflation goal, the 10-year window, if you're gonna, and I've already talked about the broader inflation, if your rent is $1,200 a month right now, in 10 years, your rent might legitimately be $1,500. All right, and I don't, rent, if you are paying $1,200 a month for rent right now, in 10 years, your rent might be $1,500. Coca-Cola might go from selling for $1 a can to $1.25 a can. All right, that's more or less the direction that things are headed. All right, and if okay, and here's the thing. Let's say that you are legitimately worried. Right, and I've already said that there's no reason to worry. I mean, you should think about what you're thinking about, and I give you my information for free, right? When you take a look at me, I make money in the top 0.00001 to top 0.00001% of the entire U.S. economy. All right, if you put everybody in America in a room, there would only be 20,000 people in that entire room that makes money like me. 20,000 out of the entire country. And if you take a hard look at that 20,000, 10,000 of those people might legitimately be an idiot. They might have made $2 million in a year, but sooner or later, they're just going to lose it. Right? They're going to go into whatever, buy themselves a Lamborghini, lease themselves a Lamborghini, and have major problems, and then they're going to lose all their money. All right, and I give you my information for free. You have to understand that I'm not a malicious individual. You should not just be watching me. You should be you should surround yourself with legitimate rich people. Legitimate, not rich people, but legitimate wealthy people. All right, like this person, like I haven't seen anybody do anything like this before in my entire life. He makes more money than an entire city of people combined. I mean, I didn't even know you can make money like this. Right, and when you surround yourself with people like that, you're more likely to have that rub off on you. Warren Buffett, his stock investment philosophies, and I'm not talking about and if you find a rich person and if you find a wealthy person and you're like I think that this person is legitimately sold their soul to the devil, then don't be around them. I mean, me. I just run beef cattle, right? I run beef cattle. I make my money running beef cattle. I would say that, well, I mean, if you take a look at my numbers and you just take a look at it for what it is, I mean, maybe I invest about $1,000 a month, and my business maybe makes about $15,000 a month. So, I put about $1,000 a month into it, and I get about $14,000 back. And so, I mean, that's my business. When you take a look at it, I'm actually looking to grow my business. I'm getting everything lined up so that I can take a loan in March. I got animals that are ready to go. I got feed in yesterday or 2 days ago, and I'm feeding them real good, and et cetera, et cetera. The body conditioning score of my animals are good, et cetera, right? The cattle market is still doing good. But let's think about it. Let's just talk about Coca-Cola, and let's talk about the broader economy, all right? So instead of my business, we're going to talk about Coca-Cola. I've already said that in terms of getting an understanding of the broader economy, that the yield, the interest rate of the economy, and the broader asset market is effectively on a counterbalance, right? I talk about this all the time. I say this all the time. I actually purchased an option contract in the long-term U.S. Treasury bond about a year and a half ago because I was looking at the cattle market and I was taking a look at the broader economy, and I was taking a look at everything, and I was like, I don't think that there are really any economic forces at hand that would cause the cattle market to drop in terms of just the commodity markets. But if the overall broader U.S. economy goes down, then the cattle market would go down too. And so I actually leveraged for a bond as an insurance policy for my business. Right? And why did I do that? Because I believed that the broader U.S. economy, if the broader U.S. economy took a downturn, then the cattle market would be negatively affected. But I didn't really see any forces solely in the commodity markets. I did not see, corn is going to go skyrocketing over the next. I did not see anything like that. Right, if we were going to have a whole bunch of beef cattle appear, I mean, these heifers would start having to have babies, and that would take a year, and then you raise those animals to a feeder cattle weight. That's going to take another year. So, I mean, we're talking about 2 years before the broader beef cattle inventories turn around. And so I was taking a look at everything, and I was like, I don't see anything in just the commodity markets that would say that the beef cattle market is going to tank. But if the overall broader U.S. economy falls, then the feeder cattle market would fall too. And so I purchased a call option in the long term in the 20+ year Treasury bond as an insurance policy for my business. And so let's take a look at it in terms of the broader U.S. economy, and all of these things that I say. I'm just giving you the best information that I can. If anything, you really want to write this stuff down, or if you hear it enough and you begin to memorize it, then look it up. All right, I'm not giving you the wrong information. I'm giving you the best information that I can. And so the yield of the bond is effectively going to be what determines the interest rate of the economy, the yield of the U.S. Treasury bonds, the various bonds. And so let's say that you are in a situation where you legitimately think that Coca-Cola is going to fall by 50%. And let's say that after 10 years, let's say it does fall by 50%, but for those first 10 years, you actually get your 3% dividend and the stock goes up by 7% a year. If the stock goes up by 70% a year, just that, let's say you get a 7% return on your investment every year and you get a 3% dividend. If you do that after 10 years, you would have $410,000, you would have $400,000, and you would have put $240,000 into your investment. And let's say for the first 9 years, everything just goes kind of okay. You're keeping an eye on the company. The company's not doing something drastic like changing their Coca-Cola formula. They're just still producing Coca-Cola. It's the same Coca-Cola from 10 years ago. They're producing the same thing, but the economy's been inflating, and now they're selling $1 cans for $1.25. The earnings of the company has gone up. The stock price is higher. You're sitting there with your 10% return, 7% return a year, and you're collecting your 3% dividend. You put $240,000 into the company, and now you have $400,000. And on the 10th year, the stock market tanks by 50%. You would still only have lost $40,000 of your own money. And if Coca-Cola falls by 50%, that would mean that something is majorly wrong with the economy. The broader asset market is tanking. And if the broader asset market is tanking and the U.S. Treasury bond is a counterbalance to the broader asset market, that means interest rates are plummeting to zero, maybe even negative. Interest rates are tanking, like borderline zero going negative. And if interest rates are borderline zero and you still have $200,000 worth of stock, then you can borrow against your stock at borderline 0% interest rates. And then you can go and buy whatever the heck you want. Coca-Cola is not going to zero. All right, Coca-Cola is not going to zero. All right, not in the next 10 years. All right, and if I legitimately think that Coca-Cola is gonna go bankrupt, I will let you know. I will make a video and I will say, you know what, all of these restaurants decided that they don't want Coca-Cola anymore. Everybody who was drinking Coca-Cola decided they don't want Coca-Cola anymore. Everybody just wants to drink water or juice or whatever else, right? I mean, I will tell you. I will make a video and I will say I think Coca-Cola is going to zero. But as of right now and for the foreseeable future, Coca-Cola is not going to zero. If anything, it's going to go the other way. It's going to $1.25. It's going to go 25. If anything, that $1 can of Coca-Cola is going to $1.25. And when that Coca-Cola goes from $1 to $1.25, people are still going to buy it. They're going to buy just as much when it's $1.25. They're going to buy just as much as when it was $1. All right, and when they buy it for $1.25, the earnings of the company are going to go higher. All right, and so, and if let's just say for 9 years your investment kind of goes okay. You get a 7% return on your stock, and you get a 3% dividend. You put $240,000 into the thing, and you got $400,000 back. That $400,000 is appreciating by 10% a year, but whatever, whatever, right? The economy tanks, and a Coca-Cola stock falls by 50%. Even then, you would have only lost 40 grand, and interest rates are borderline zero. You can go and borrow against your stock. You can go and take a loan against your stock for near 0% interest rates. All right, and then you can go and buy whatever the heck you want. Everything is half priced. It's not just Coca-Cola. Coca-Cola is not going to go to 50 cents, and then everything else, everything. And this is what I mean by okay, if anything, if you're really going to be concerned about something with the broader economy, if you are going to legitimately be concerned about anything, well, but me, it's just kind of whatever, right? Because me, but if anything, you should be more concerned about how the government is going to respond if the economy is legitimately looking like it's going to tank by 50%. Because you never know, right? I mean, the central bank might legitimately take interest rates negative by themselves. They might not let the asset market fall. They might, take the rates negative themselves and print a whole bunch of money, right? I mean, because I've already talked about different ways that this the interest rates could drop, right? There are different ways that the interest rates could drop. It's not just the broader economy tanking. The central bank could take them negative themselves. The central bank could take interest, and interest rates have been zero for a long time, and they were zero for a long time. I don't really know if taking interest, if something bad were to happen, like the economy looks like it's going to fall 50%, taking interest rates to zero. I don't know if I've actually said this, but I think I have. But this is taking interest rates to zero is actually probably not going to save the economy. If anything, they'll have to take the interest rates negative. Interest rates will have to go negative, and then they'll have to print a whole boatload of money to save the economy. And if that happens, I mean, interest rates are at that point, if the broader U.S. economy starts to skyrocket, then the interest rate, I mean, then if you're holding on to stock, you'll make a boatload of money. All right, you'll make a boatload of money. Interest rates will go skyrocketing too. Even if the government is holding them at zero, the bond will collapse. All right, the bond will collapse. Even if the government even if the government has the interest rates at negative, or not the government. The central bank is not the government. Okay, the central bank is a private institution. But even if the central bank holds rates negative, even if they hold them negative, the free market will actually, the bond market will collapse on its own, and then interest rates will skyrocket. Your stocks will skyrocket. But I mean that's not. I mean, that's like a doomsday scenario. And do I think that we're gonna have a legitimate doomsday scenario? I don't think so. If anything, what do I legitimately think is gonna happen? I think that in 10 years we're gonna wake up. And, if you were paying $1,200 a month for rent, you'll be paying $1,500. That's what I think is going to happen. In 10 years, what do I think is going to happen? That's what I think is going to happen. In 10 years, right now you're paying $1,200 a month for rent. In 10 years, you'll wake up and you'll be paying $1,500 a month for rent. Right now, you're paying $1 a can for Coca-Cola. And in 10 years, you'll be paying $1.25 for a can of Coca-Cola. That's what I think is going to happen. All right. That's what I think is going to happen. I mean, and I hope that we don't have some, broader, I actually spoke about this a long time ago, but if anybody's going to nuke anybody, I think it's going to be Iran is going to nuke Israel. But I don't, I'm not a warmonger. I don't want to see that happen. Why would I want to see that happen? I mean, we're talking about millions and millions, and I mean, we're talking about tens of millions of people immediately being obliterated off the face of the earth. I mean, and the last time anybody saw anything like that, it was like World War II, right? I mean, they were like hauling millions of people off, civilians off to concentration camps. I mean, thousands and tens of thousands and millions of people were dying, were dying in war, and they were hauling millions of people off to concentration camps, and civilians were being bombarded every evening, and that's World War II was the last time we saw anything, or not anyone saw anything like that. And if you speak to somebody about World War II or Vietnam or the Korean War or anything like that, I mean, it's horrendous. I mean, why would you sit there and go, oh my God, what would be fantastic is if we had a massive war. All right, I mean, it's like, are you dumb? Why would you want that? I mean, nobody's seen anything like that in the last maybe 50 years. Nobody. Right, and if we have something like that again, I mean, that would be horrendous. But war is also very inflationary. You got to think about it. Wars cost a lot of money. All right. And if there's a lot of money being spent, then there's a lot of money moving around that's inflationary. War is also very inflationary. And so, I don't if anything, I think that we're going to wake up in 10 years, and if you're paying $1,200 a month for rent right now, you'll be paying $1,500. If you're paying $1,500 a month for rent right now, you'll be paying $2,000. Right now, a can of Coca-Cola is $1. You'll be paying $1.25. And if you really get it together today, and you start putting, you really start getting your life together, and you really go for it. I mean, within 10 years, you can effectively do whatever the heck you want to. All right, me, and just, I talk about things in terms of my perspective, in terms of my business, very, very often. Like this business, the only time that I ever lose money is when I have an animal die, right? If I have an animal die, I've lost money, but, other than that, everything else is just effectively just a store of wealth, tax deductible, or an appreciating asset, and usually all three at the same time. So, I put $1 in, and I've actually spoken about this, and in terms of how I see things, I don't care about the cost at all. I'm more focused on making the money. Is my business profitable? How much profit do I anticipate it's making? Where do I want to take my business in the future? That's the kind of stuff that I worry about. I don't even think about the $1,000 a month. I don't even think about the $1,500 a month. At the end of the day, I understand, right? I bought $2,000 worth of feed, and that $2,000 worth of feed is going to last me about a month. I understand that, but I don't sit there and go, oh my God, this $2,000, I can't do it. Right? I mean, here in about a month, I'll make about 14 grand. And for about 3 months, every single month after that, I'll make about $14,000 a month, $15,000 a month on the cattle. At the end of the year, by about November, December, January, February, in those 4 months, and and realistically, I'll have more cattle. And so, realistically, I mean, we're talking about, even if I just ran this business just on this farm, and let's say I went back up to my original 40 animals, and I was selling 8 animals a month, that would be 5 for 5 months. I would be selling animals, and we're talking about 9 months out of the year, right? We're talking about 9 months out of the year, I would be making $14,000, and that would be effectively be about 120,000, 140,000, something like that dollars. And whatever, I need $500 for a tonnage of urea, right? Then I'll just take the $500 out of the $140,000 that I'm making. Right, I need $2,000 for feed. I need to put $10,000 into feed for the year to raise my animals. I'll just take the $10,000 out of the $120,000. right? I need whatever. You know, 7 tonnages of urea for the year. That's $3,500. I need $3,500. I'll just take the $3,500 out of the $120,000 that I'm making, and I'll still sit here with like $8, $9, $10,000 a month of net profit. All right, I don't care that it cost me $2,000. I don't care that it cost me $1,000. I don't care that it cost me $250. All right, you know, and that's, I think that's the thing that it's gonna you know, be the most mind opening. All right, you should think about making the 400 grand. You shouldn't, you know, and you should think about coming up with a realistic idea of what's going on. Right, Coca-Cola is probably going to sell for $1.25 in the future. It produces a 3% dividend guaranteed every single year. It's been going up by like 7% a year for the last 74 years. If anything, in 10 years, Coca-Cola is going to be selling for $1.25, and it's selling for $1 right now. The broader economic forces at hand, it's effectively they're looking for 2% inflation a year. Right, I mean, you know, the broader asset market is tied to the bond as a counterbalance. Even if broader asset markets tank, that means that the interest rate will tank as well. Right, and if the interest rate tanks, then you can borrow money at near 0% interest rates, and you know. With everything happening in terms of the inflation, I don't know if it was inflation that made me, you know, that made me do so well. I'm actually, you know, I'm still kind of thinking about this because, you know, a lot of people, I think a lot of people are having a real hard time, and I'm like, I wonder why it was that, you know, when a majority of people were having such a hard time, you know, why did I do so exceptionally well for myself? You know, when a majority of people were having a very difficult time, I managed to get myself into the top 0.0000001% of the entire U.S. economy. And when I think about it, I think it was because I don't know if it was, I guess, the cosmic wind, but I got into investing at a very good time. I started purchasing assets and accumulating assets, and you know, getting my tax deductions and appreciating my assets at a very you know, at a very good time. You know, everybody, it's like the economy was inflating uncontrollably. I was making millions of dollars. I mean, you know, and even now, you know, my whole entire 2024 just kind of went okay. And for the year 2024, I produced a net positive cash flow of about somewhere between 70 and 80,000. Well, out of my business alone, you know, at the end of 2023, I had a rough time. I actually lost money. I actually lost about 25 grand. And then the beginning of 2024, I had to recuperate that loss. And then I actually, but here's the thing. And so, you know, and then I lost money on the option contract. I lost another $25,000 on the option contract, but I still ended up the year net positive, right? I'm still sitting on a large amount of money. I mean, you know, I'm still sitting on about you know, in terms of just cash, like if I were to go and just liquidate and just hold on to the money, the excess money, I would still be net positive. I mean, but I mean, when you take a look at it, here's the thing. It's like, you know, and I know, and I still have a little bit of a difficulty dealing with this because it's like, you know, in terms of the broader people, oh my God, you know, I can't believe it, 50 grand. But you have to understand, 50 grand is, to me, 50 grand is like it's like 2% of my money. 2%. I mean, for the year 2024, I made, you know, realistically, it's over 2 million. All right, if I took $350,000 and buried a hole in my backyard, put the 350 grand in the hole and lit it on fire, it, honest to God, would not do anything to me. I wouldn't even care. All right, so 50 grand is, you know, and I'm not trying to slap y'all in the face with money. I've already said I don't slap people in the face with money. I'm not doing this to brag. I'm not doing this to boast. I'm just giving you a realistic idea of what's happening. My business produces about $14,000 a month. It produces about $11,000 to $14,000 a month. You know, it produces about a $14,000 a month profit for about 9 months out of the year. And so, you know, it produces somewhere between $8,000, $9,000, $10,000 a month. If I lose 50 grand, it doesn't matter. right? I mean, I make such a drastic amount of money that it doesn't matter. You know, this cattle business makes me more than double that every single year. All right, I put whatever. I put, you know, $250 into fertilizing my field. You know, my expenses are sky high, and I bought $2,000 worth of feed. It doesn't matter. Next month when I sell my cattle, I'll be bringing home like 14 grand. All right, you know, the month after that, when I sell cattle again, I'll make another 14 grand. The month after that, when I sell more cattle, I'll make another 14 grand. The month after that, when I sell another 8 cattle, I'll make another 14 grand. And realistically, you know, when I sell these 33 animals, I don't even want to come home with the extra 25 grand. I don't want to. I want to take that money and I want to buy more cattle. I want to grow the size of my asset portfolio. I get a tax deduction when I do that, and I can knowledgeably appreciate these assets. All right, and so, you know, and I'm not looking to slap you on the face with money. Don't go into, you know. I'm not slapping you on the face with money. I'm just saying, I'm just giving you a realistic perspective of what I see. 50 grand to me is nothing. Is nothing. I could put 350 grand in a hole right now and light it on fire, and it wouldn't even do anything to me. All right, next month when I sell my cattle, I'll make $14,000. All right, my business on the average costs me about $1,000 a month. On the average, it costs me about $1,000 a month, maybe $1,200 a month, and I make 110 grand off that $12,000 investment. I make 110 grand. All right, I put about $14,000 a year into my business, and for that $14,000 a year, I make like $110,000 back. I'll just take the 50 grand out of the $110,000, and I still have $60,000 left just in the business. It doesn't matter to me. I'm not going to say it doesn't matter, because I mean, I don't want to put myself in a situation where I'm like, I'm just throwing money everywhere and it's you know, being burned up. But I mean, it's different. And I've always said that, you know, if you think it's unfair, then you go and you start yourself a cattle farm as a first generation farmer and make yourself $2 million. Go and make yourself $14,000 a month. Go and make yourself $10,000 a month. And then tell me it's unfair. See if you can even do it. All right, don't sit there and tell me that it's unfair. All right, I mean, you know, it's like, you know, I will legitimately kick you into a hole and leave you for dead. All right, are you dumb? Like, don't sit there and say it's unfair. All right, if you want to know what it's like, then you go and start yourself a first generation farm. Run yourself commercial cattle, make yourself $2 million, and then see how well that goes for you. It's going to be the hardest thing you have ever done in your entire life. You probably won't even make it. All right, and so, you know, that's it for me today, YouTube. Y'all have a good one.